everyone, this is Warren Howe. Hope you're having a great day as always. Now, today we're going to be talking about business owner mindset, right? It's a very interesting video because we're going to be looking through on mental model, thought process, and when it comes to investing, the most important thing in my opinion is being able to stomach volatility, being able to have a strong mental model and thought process when it comes to investing in a business before letting that affect our informed decisions. Yep. So it depends on your strategy, but I'm talking to the long-term hodlers out there. I'm talking to the long-term investors out there, right? So again, if you haven't, show a brother some love, smash that like button, smash that heart button. I go live every week on the platform. So, hope to see you there, right? On YouTube, smash subscribers, right? Subscribers if you want to follow more updates. As usual, we started a public portfolio, right? 2 weeks ago, beginning of the year, we'll be showing our trades transparently, what we're doing. Hint, hint, I've been buying a little bit of SoFi more after the bank charter approval, which is insane. So I'm going to talk a little bit about that. But and I'm going to use this as a base, case study. But that being said, though, at the topic at hand is having a business owner mindset, especially at these times right now. So what I think is that is very relevant because the stock prices, especially on fintech, on technology stocks, growth stocks overall, they have been dropping like crazy, right? You can see from the highs easily, right? Stocks that are not profitable, low balance sheet, lower down in the S curve, they've been dropping down, easily 50 to 60% from the highs, right? If I was at 47% in SoFi's case in 2 months, right? So this bank charter is a different ball game, which I'll cover in another video. But again, business owner mindset, right? So think about it. What is the thought process, right, when it comes to investing? The thought process is that we are investing in a business. Now, you've been hearing this tons of times. But the thing is, we don't really treat it that way. Do you? Do we really treat it that way? Right? It's the easiest thing to say, but it's not really the easiest thing to do. Because when stock prices are actually going down, and 2 months is way long. 2 months is really testing our thought process here. And it's not it's not just SoFi. You got Roku, you got apps, you got LC, all these growth stocks actually getting beaten down, especially fintech, which brings another story of will it ever go back up? Now, my thought process is I always ask myself these questions. I ask myself, am I investing in a great business? Obviously. Because my concept is businesses will have good times, businesses will have bad times. Now, here's a fun fact. Investing in the stock market means that we are bound on 40% systematic risk. That means 40% of why stocks are actually going up, why is they going down, is due to sentiment, market risk, market sentiment. That's systematic risk. Why is that relevant in the stock market? Because regardless of any good fundamentals of the companies, right, the stock market will bring them down simply because of the whole sentiment around what everyone is thinking. Yep. It is a mixture of algorithms, it's a mixture of bots actually selling, it's a mixture of big funds actually selling because, higher inflation means, higher interest rates. Higher interest rates means lower on growth stocks. You see the concept? So that's the whole sentiment, and they want to cash out from probably having good gains over the year or 2020, right? So imagine when you look at big funds, right? Fund managers, they have a quota, they want to take profit, so they sell heavily, right? And because they've been gaining since 2020. Now, that's on market sentiment. But if you have the thought process, now I'm talking to the long-term hodlers here. Yep. If you base your buying decision off market sentiment and you're following and timing the market, guess what? We're going to lose money over time, over the long run. That's a fun fact, right? It's a fact. If you are trying to time the market, you will lose the money over the long run because we can never be smarter than the market. But we should be spending more of our time in studying the business, studying the core. Now, you've been hearing this a lot, right? You don't need me to tell you. You can go search YouTube and people will tell you. But the concept is We need to be owning more shares over time. That's how we can beat fund managers, and that's how we can beat the S&P. You spot a high quality business, yep. You own more shares if you go in tranches. And imagine this, if the stock price is going down, our risk is going down, right? If we look at it over the long run, our risk is actually going down. If you have done your homework and your projections to tell you that SoFi deserves to be a 50B company because of this reason, then is it a steal to buy now? Now, I'm not saying this and releasing this video just because the whole stock market is actually going on a rebound. I've been buying SoFi on every level. In fact, I look at fundamentals. I've been averaging up. So I'm being transparent. I'm actually down on my SoFi position just a little bit simply because I've been averaging up after the Q3 update. So my point is, I'm looking as an investor. I'm looking as though I want to own more shares over time. Now, SoFi stock soars after company gains approval for bank charter. If you've been following, this is huge news. And I want to share this with you guys. In the platform, I've been saying, okay, let's go SoFi bulls because of the bank charter approval 1 day ago, 2 days ago. Regardless of how the stock price moves, fundamentally, they are now in a way better position, profit margin-wise, reputation-wise, credibility-wise, to new consumers, etc., as talked about during the live sessions. Still 1.5 months to the next quarter earnings. Hopefully we see them kill it to maintain flywheel effect status. Now again, why am I saying regardless of how the stock price moves? This is key because I'm looking at it as a business. What is the reason? What is the reason that you've been buying SoFi or any other stock? Why? And when? How long are you going to hold it? What is your buy plan? Right? So if you have a business owner mindset, you will think of it as a business rather than a stock. You would hold this bad boy all the way and not look at the screen so that you do not get affected by negative or red color, right? Red color means down, obviously. So that's how we should approach it. Regardless of how stock price moves, is because I don't know how the market sentiment will be, how the 40% will be at these times right now. The sell-off might continue all the way throughout the year. In fact, there's so many headwinds in the year for growth stocks to go down instead of go up. So my point is, do not freak out. But if you are holding on the long haul, for the long haul on SoFi, for example, then know that their profit margins will increase. Reputation and credibility will increase. Thus, organic growth. Yep, so this is one of it. And another sort of mindset that I actually look at is when I look at the prospectus of Dev 14A, right? So just a little thing, right? I go to Dev 14A, other definitive proxy statements, because I want to look at, this is by the Edgar website, by the way, yeah? And because I want to look at shareholder, compensation, how much are they getting compensated? I want to look at how many shares do they own, right? So far, one of the sort of bad things is that Anthony Noto, the CEO, is not really founder-led, and he just has a 1.7, 1.9 stake in the company. But it doesn't matter. Why am I showing you guys this? Is because, think about it. If you have a long-term hodling mindset on great growth quality companies, you want to be owning more shares regardless of the price, right? So Anthony Noto, no doubt, is a 1.7% stake, have 14 million shares. Now, obviously, we can't reach to 14 million shares for normal retail investors, but I'm satisfied with my 5,000 shares and growing, right? I'm satisfied with my 7,000 shares, right? For example. So my point is, if you look at that mindset by holding a great business, you want to be owning more shares because you're investing with the management, and in fact, you're investing in the management, right? Don't get me started on Tesla. That's a perfect example of when you reach to a level of, regardless of any stock price, you will just be piling onto the business. Now, don't get mistaken. I'm not encouraging you to buy on a dip, simply buy on a dip forever on any type of business. But it's so relevant at these times right now because we want to be owning more shares of a company over time to have that compounding effect. Now, obviously, we have to update on the company. Every progress, right? We update our valuations. Having this bank charter, I already adjusted my projections on this stock simply because their profit margins can easily reach 20%, 20 to 25% over the long run. Yep. So this is thinking like a business owner. Now, other things other than looking at shares just to be motivated to own more shares, I also look at bear case scenarios. I look at I look at every aspect. I'm investing with conviction. I look at SoFi, hopelessly overvalued, fair value of $7. Right. This article just recently came out, and I read a lot of Seeking Alpha. So I'm reading here, and they're telling me that okay, member growth are unsustainable and will adjust downwards. Yep. I'm reading slowing member growth comes slowing revenue growth. I'm reading bank charter doesn't matter. Now it is possible that growth can slow if, let's say, the marketing strategy is not executed right. Their flywheel effect will actually sort of won't break the inflection point. It is possible, but when you tell me that the national bank charter on SoFi does not matter, now that is something what we call sus. Let put it that way, right? It's very sus because having a bank charter, there's tons of potential tailwinds coming forward rather than headwinds. And his basis is that the EBITDA is extremely low, which I agree. But with a bank charter, will there be better times moving forward or worse times moving forward? Right? So think about it, and I mentioned this before during our lives. If it goes down to $10, right, ever since IPO, fundamentally, are they better in a position right now compared to then? Or are they worse? If they are better and the stock price is going down, then doesn't that mean it's a better buying position? Simply because we are buying for the long term, right? Now, these are my thoughts on having a business owner mindset, right? Owning more shares of a company, looking at a high quality growth stock or any other quality business that you deem is good, driven by good management, being motivated by looking at number of shares that owners have, so because we are investing with them, and also looking at bearish sort of thesis to actually convince yourself or make your thesis stronger by stress testing it is another way of being a business owner. Yeah, because we don't sell just because of bad market sentiment. We only sell if, let's say, the valuations go ahead of themselves, or there's a fundamental structure change, or management is going in the wrong direction that you deem you don't agree on. Yep. So I hope you got some value out of this video, and I'll see you in the next one. Thank you.